First one on the list is the Bitcoin. The weekly chart ended as a long lower tail candlestick with a considerably small real body. This has more bullish than bearish implications, as we do expect a further upward move. From Monday onwards, we will see how the markets interpret the events of last Friday. We had Donald Trump, the president of the United States, hosting a speech, as well as Jerome Powell. Powell said they do expect to cut interest rates. This is not something new, to be honest. It's been 1 year ago we figured that out. If you watch the videos that we do, you will have known that so far. All the major central banks now they are cutting rates, but the markets definitely react to the depreciation actually of the US dollars. So if we check lower time frames, we can see this price action here, which we call a candle with an unusually long body. It closed as bullish. We have a nice reversal here. Look at this. The market formed consecutive lower lows and lower highs, and here it made a nice higher high. Why I call it nice? Because the lower lows stopped, higher highs took over. This is the first sign of a trend reversal. Also, the price broke above a downward trend line, and this has bullish implications. How can we trade that? We can wait for the retracement around 113 to 114,000. There are a couple of strong supports here, broken swing high, and here the mitigation of this bullish candle. If the market appreciates that and the price moves all the way down, we can find some opportunities, and we expect a push to the upside. This is Nasdaq. Last week, the price also found some buying pressure right here, and the weekly candle ended with a long lower tail. Still has bullish implications. Generally, this market forms higher highs and higher lows. It's in an uptrend. The 4-hour chart, similar scenario with the Bitcoin, but in a more choppy way. There is no consistency within that downtrend. The market, in this case, it's more ranging rather than trending. I would prefer to see a more clear higher highs and higher lows before I commit to buy this one. But generally speaking, we cannot take away the fact that this market has more bullish than bearish implications. So from Monday onwards, perhaps higher highs and higher lows on the hourly, on the 15-minute chart can trigger some more buying pressure on Nasdaq. Gold, based on seasonality patterns, we don't expect some significant moves on the gold. It's been a while, the market moves sideways. We see there are more bullish than bearish candles on the weekly chart. Last week, the price remained within this range. 4-hour chart towards the end of New York trading session, also gold appreciated. Same pattern, very similar actually with the Bitcoin. The lower lows and lower highs, they turn into a potential reversal. Another trend line could be drawn among the swing highs. The price showed the reversal from the break above here. The market traded all the way down there, and then it bounced it off and pushed again above the trend line. In this case, we have a couple of support factors here. The one is right there, and the other is around the beginning of this bullish order block. Also, there is a nice support here. If the price breaks above the previous week's close there, we do expect the market to push all the way to the previous week's high. On the other hand, if the price comes down, we do expect to see some retracement. We're going to talk about potential trend reversals only if the price decisively closes below this low point. Sterling against the Japanese yen, weekly time frame. As we stated on the previous market analysis, the resistance could be a great potential for some sell opportunities, although we had a bullish continuation pattern on a lower time frame. Last week, the price pinned it bearish and at resistance, and it has more bearish than bullish implications. On the 4-hour chart, the higher highs and the ascending triangle pattern didn't work through. The price broke below the trend line. It tested the trend line 3 candles later. Then it moved all the way back and again below the trend line, and at this resistance, it rejected. It's more bearish than bullish. I repeat that. If during the London session we see some kind of pullback, and maybe during the New York trading session we can see some break below this low, that could be a great opportunity to consider this market in a downtrend. If the price keeps moving downwards, we can see the first support as this low, and if the price breaks further down this low, it's going to be the next area of support. This is the 4-hour chart, so imagine if you trade 15 minutes, 5-minute charts, you can have a good room for this downward move. Again, we need to see how the price develops on every trading session. USD Japanese yen, another currency pair that is expected to follow through a strong sell-off. Based on the currency correlation, the Japanese yen, it's much stronger than the other currencies across the board. We saw that with the Great British Pound JPY, and now the US dollar last Friday reported as a weak currency, yen strong currency. Put them together, we expect to have a nice downward move. Anyhow, the weekly chart support more bearish than bullish, and the 4-hour time frame, it's been a while trading within this long-term consolidation. If we measure the distance between here and there and we add it at the potential broken point here, we expect a nice push to the downside. Minimum target, if we break, it's going to be this one here. If the price breaks below the support and keeps on going, the first target and minimum target, again, it's going to be the 142.800 approximate. US oil, another promising market for the upcoming week. The weekly price action ended with this bullish candle. It's considered a bullish hammer, but it still has more bearish than bullish implications because the market keeps forming lower lows and lower highs. As I teach during my courses, first it's market structure, then is the price action. If we go down to the 4-hour time frame, you can see how the price action develops. And also the most significant part here are the swings. The price formed lower low and lower highs. The last area of resistance, which is also the neckline of this lower low formation, is still intact. We do expect the price to break above this neckline before we start looking for long positions. If the price breaks above here, and if it's going to do it, it's going to do it, of course, next week, we expect the first resistance to be this area there, the second resistance up here. So imagine this is a 4-hour chart. If we go down to the lower time frames, like the hourly, 15 minutes, 5 minutes, and try to capitalize, ideally during the New York trading session, because the US oil moves its best during the New York trading session. Last 3 currency pairs, Great British Pound, Euro, and the Australian dollar against the US dollar. Let's start with the weekly chart and the sterling. The price reject again this 1.34. It found supports there last week, and the buyers took over. Of course, majority of the move occurred last Friday. On the 4-hour chart, clear break of this market structure, higher highs right there. We do expect this to be the first area of support on subsequent move here, but I still have some more technical factors down to the 1.34. And then if we find, let's say on the hourly or 15 minutes, some double bottom, there can be signal that the market now it's ready to proceed it with a further upward move. Euro and the US dollar. This one, it's a bit tricky and traders might want to get caught into the wrong side of the market actually. Look at this bearish engulfing on the weekly chart. This bearish engulfing is still active. The last 3 weekly candlesticks traded within the bearish engulfings highs and lows. So if the price falls break last week, the previous week's high, if we go down now to the 4-hour chart, these areas up here, the resistance and this section there can push the price even lower. Now, keep in mind that this market on the 4-hour still has an open business around 1.14600. If the price comes all the way down here and it doesn't found some support and it breaks, then we might gonna see a further continuation to fill up this area. We see this happens all the time in the market, and it might gonna be the case for next week, but if not for next week, definitely at some point the price is gonna come down to pick up some more orders from here before it continues moving upward. But definitely what we expect to see next week is at least the mitigation 50% of this. Last on the list is the Australian dollar against the US dollar. Pretty sideways here on the weekly chart. 4-hour time frame, it tried to create this kind of equal bottoms here. It's not, some traders they think this is a head and shoulder. From a technical perspective, this is not a head and shoulder reversal pattern. It's more like equal bottoms, then a false failure swing high and a decline downwards. The price stopped at support during the New York trading session. It pushed upward, but it keeps maintaining these lower lows and lower high formation. I prefer to trade something with Great British Pound and the Euro next week until this market shows some clarity. Next week, starting from Monday, in the UK, the banks will be closed due to bank holidays. The only thing you need to be aware of is the spikes in volatility during the overlap trading session, especially during the New York trading session. The markets, they will try to digest last Friday's events, and that was on the cost of the depreciation of the US dollar. So be mindful about that one. On Tuesday, we expect volatility and liquidity to be as usual. Only towards the end of the New York trading session in Canada, the Bank of Canada's Governor McLean will host the speech. This will directly affect the Canadian dollar. Wednesday, it's expected to be a surprising day for the Australian dollar. During the Asian trading session in Australia, they are expecting a significant increase by 0.4% on the CPI. That's the yearly, if their actual confirms the forecast. And at the same time, the market follows through a strength on the Australian dollar. The volatility and the direction of the Aussie will be significant. So keep an eye on that one. If you are trading as well, anything like crosses euro against the Australian dollar or sterling against the Australian dollar, we can find perhaps some good bearish opportunities there. But if you stick with the majors, maybe the Australian dollar against the US dollar will be the case. On Thursday, only the prelim gross domestic product quarterly report is expected to increase by 0.1% in favor of the US dollar. Doing the analysis, today is Sunday. We have Monday, Tuesday, Wednesday. So maybe it's a bit early to talk about the US dollar's performance because we have some other significant events in place. Let's see how this will affect the US dollar. It's not an event generally that causes major trend reversals, but during the report, definitely we do expect some spikes in the market. Last trading day of August, Friday, in Canada, they will report the gross domestic product. They expect an increase by 0.3%, and this can favor the Canadian dollar. If you trade anything like USD against the Canadian dollar, you can find some good opportunities perhaps during the New York trading session. The trading week and month will end with the core PCE price index in the US. It's expected to remain at 0.3%. If there won't be any surprising news events to affect the US dollar during the week, and the markets, they will move as usual. We actually don't expect anything significant to happen here. The only case to have some significant US dollar move is the actual report will drastically beat the forecast or the opposite.